Oh my gosh. Have you seen the rates? They're going up and up. How is this going to affect your buying power? Hey friends, it's Paula Tisch, your favorite Huntsville realtor. Don't forget to follow me on all the socials, Atlas with Paula, and like and subscribe to my YouTube channel. I appreciate it. Today we're going to talk about interest rates. Did you know that the interest rate for your mortgage has a direct impact on the payment that you will be making every single month? Higher interest rates mean higher payments. That's just the bottom line. And because of this, what happens is it actually reduces the amount of money that you're able to borrow for your house. So there's two ways we're going to look at this today. First way is going to be by the cost or the price of the house. So let's say you want to buy a $400,000 house, okay? If you are going to put 5% down on a 30-year fixed mortgage and you have a 3% interest rate, which is what we had a few months ago, your payment would be $2,149. $2,149, okay? Now, if the interest rate is 4%, it's $2,361. That's $220 more a month. If your rate is 5%, that's $2,587 a month. Okay, so let's think about that. Since the rates have gone from 3% to over 5%, that's an increase in your payment, $440 a month. That really changes what you can and can't afford. Now let's look at it from the other angle. Let's say that you're going into a situation and you're like, okay, what I can afford is $2,150 a month. You're shooting for a payment of $2,150. You have 5% down and a 30-year conventional mortgage, okay? If the interest rate is 3%, then you can afford a $400,000 house. If the interest rate is 4%, you can afford a house that's $370,000. So that's $30,000 less than when it was at 3%, okay? If the interest rate is at 5%, then you can afford $340,000. So $60,000 less than when it was at 3%. So you can see how the interest rate and it climbing directly affects how much you can afford for your home. And this is why so many people are looking at rate locks and purchasing rate locks and all sorts of other things, even adjustable rate mortgages, which we will visit another day. But I just want you to understand what the rate increases are doing to your payments and to your buying power. Now, I know you get the boomers out there freaking out going, well, I paid 18% back in 1970 on my $16,000 house. Well, okay. Let's compare apples to apples though, right? We're not used to that. That is not in our sphere currently. That is not something we really even can understand. So this is freaky and scary for buyers who a few months ago thought they were buying a $400,000 house and now they're buying a $360,000 house. They're getting less house for their money. But the thing about mortgage rates is that they are constantly changing. And when you are in a 30-year mortgage, you can refinance it later. There are all sorts of options. You are not committed forever, okay? So it's still a great time to buy, and I would love to help you. So give me a call and let's go find your brand new house. I want you to love where you live.